following is a paid program. The opinions expressed are not necessarily those of WNBU and Interbanks Media. Welcome to All Things Money with David Blain, a thoughtful and revealing discussion of actionable ideas and effective strategies to help you through the complex world of investing, taxes, and real estate. Now, with All Things Money, here's David Blain.
Hello and welcome to All Things Money. I'm your host, David Blain. Thank you for joining us today. I'm back after a week out in California doing some business. I hope you enjoyed John Jertson filling in for me last week, but we're back today and got some good topics for you to cover. As always, we like to give out the contact information. We start the show. If you have comments or questions for me, ideas for the show, topics you'd like us to discuss, feel free to get in touch with us. We love to hear from our viewers and listeners out there on 94.1 FM WNBU as well as cable TV 10 in New Bern. So the number is 252-633-0107. The email for the show is allthingsmoney@dlblain.com. And our website is www.dlblain.com. Big contact us button there. We'd also like to thank Bob Register once again for engineering the show. Does a great job. And we will get on with the show now. Okay. One thing that if you watch any of the financial media, read newspapers, CNBC, CNN, you see these talking heads on TV, whether it's politics or finance or whatever. There's always these talking heads, and especially in finance, what we want to do is just kind of warn you some of these folks. There's a couple examples here I'm going to cover of people that make these famous predictions, and they become overnight sensations, and it really carries them for their whole career. And a lot of times they do nothing in the interim, but that one famous call is something that carries them throughout their whole career and gets them a lot of fame and money, but doesn't necessarily help you as the investor by following them. So last, I think it was about maybe February, there was a gentleman by the name of Marty Zweig, who died, and he was a prominent market pundit. He was the author, and of course he had an investment advisory firm, a New York investment advisory firm. And Marty wrote several books. He published a newsletter back in the 70s called the Zweig Forecast, and he had a handful of subscribers, and he continued to publish it for about 26 years. Nothing really remarkable about it, but he was also a guest from time to time on Wall Street Week with Louis Rukeyser. Now, for those of you that are younger, you may not remember this, but I was a kid and my dad used to watch this. It came on PBS. I forget what night. It was Friday. I think it was on Friday nights. And Louis would recap what happened in the market that week. Of course, there wasn't 24-hour news cycle and all that. So he would recap what happened with the week, and he always have on these interesting guests that would tout their stock picks or what they think the market was going to do or things like that. So Marty Zweig became famous, Louis Rukeyser's show. On Friday evening, October the 16th of 1987, he went on the show. And if you don't remember what happened on October the 19th, Monday of 1987. We'll get to that. If you do, you know where this is going. So anyway, he went on the show, and Louis Rukeyser asked him to comment on assertions that the bull market is dead. And Marty Zweig replied that he was expecting a crash, but was reluctant to say so publicly. He said it was similar to shouting fire in a crowded theater. So the next Monday, what happened? The Dow Jones Industrial Average fell by a staggering 29.2% in what's called Black Monday, October the 19th. And the Zweig Fund emerged relatively unscathed from this. According to reports, he had, it was 58% of his money in cash on that Monday. And so for years, he was introduced as the man who called the crash. whenever he would appear on a show, of course, he became an instant celebrity, and he just became known as the man who called the crash. Now, he was not the only person who predicted the crash. Of course, there were a lot of people that predict crashes all the time that never occur, and there were an equal number of people that were probably predicting the bull market would continue. But Zweig, because his appearance on the Louis Rukeyser show just on that Friday happened to be right before, it was just such perfect timing that he became sort of a legend and a guru. And so his firm was managing several $billion in assets by the mid-90s. He was a money manager. He bought the penthouse in the Pierre Hotel in New York City, which at that time was the most expensive residential real estate in New York City. So just this one, innocuous statement on the Louis Rukeyser show on a Friday evening one time turned this guy into, a rock star and very famous. Now, what's interesting is there's a guy by the name of Mark Hulbert who publishes the Hulbert Financial Digest, and his job is to rank financial newsletters, all these newsletters, market prognosticators, things like that. And what he found was that many investors that follow these don't actually make any money at all. They'd be better off following some sort of passive strategy. That these investors like Zweig that make these famous calls, they have to write over and over. They've got to get out, they've got to get in. Now, if you're a nervous type person, or you don't, it's very difficult to watch your portfolio go up and down. Number one is we would recommend getting a more conservative portfolio. Now, we'll talk about bonds maybe next week. A lot of concerns about bonds. We're developing a white paper right now that's just going to be fantastic. I've been working on it, on bonds and interest rate and things like that. So I don't want to get into the punchline there. We'll probably cover that on a future show. But to try to get in and out of the market like Zweig predicted generally does not work very well over the long term. And as you can see from the Hulbert, he tracked from 1986, its inception in 1986 to January of 2013, that the returns for the Zweig fund was 5.84% versus 9.84%. So he underperformed the S&P 500 by about 4 percentage points. And a static mix allocated to about 30% stocks, 70% bonds would have equaled the return of the Zweig fund. So my point in this is that when you see these gurus appear on TV that, they made this fantastic market call, well, when you've got thousands and thousands of people making different calls every day, some of them are bound to be right, and they're bound to look like they're a genius. But you can see over the next years, investing with this guy was not necessarily all that profitable. Well, that brings us to our first break. When we come back, we'll talk about another market prognosticator. So for All Things Money, I'm your host, David Blain, and we'll be right back.